Hey everybody, this is Jay Young here, Jay Young Show. We're having another great episode today. We're going to learn more about the oil business and the acquisition divestiture markets. How does it work? Why do people do it? We're going to learn a lot of great things today. I'm going to ask some really good questions that will kind of give it for the, I don't say, people don't understand oil and gas. They don't understand why do people, do this. So Jordan, take it away. Jordan Soto, my co-host, the live part of the show here, keeps us going. And Jordan, take off and let's learn some great things about the oil and gas industry.
Yeah, there's a lot happening in the oil and gas industry, as there always is. And with us today to give a little bit more of an analytical perspective is Andrew Dittmar, Senior Principal at Enverus. I hope I got that right. If I didn't, I'm so sorry. I know you guys have gone through a little bit of some structural changes. So, Andrew, so glad to have you on the show. Correct your title if I got it wrong, and give us a little bit more insight from your perspective into this Conoco deal that's happened.
All righty, great. No, thanks so much for having me on. Excited to be here. Yeah, I'll answer whatever title you want to throw out there, but principal analyst is what I go by these days. So another historic transaction on the upstream side, ConocoPhillips acquiring Marathon for a bit over $20 billion, part of a wave of a really unprecedented consolidation we've seen across the industry that saw historic names like Marathon, Hess, and Pioneer exit in these mega deals. This all speaks to bigger is better in oil and gas right now. Shale is maturing. You're trying to capture as much of the remaining inventory and upside as you can while still keeping these deals financially accretive. So that's what Marathon selling to Conoco is accomplishing for these companies. Marathon is getting rolled into the large scale of Conoco, 150 billion plus market cap now. So up in the same scale as a BP, larger than BP, same scale as Total. And Conoco is getting some immediate financial accretion in terms of EBITDA and free cash flow that they can distribute to their investor base. And then also the remaining upside on Marathon's position, which fits very well with their existing assets across the Delaware, Eagleford, and Williston Basin. And they'll be looking to efficiently develop those and exploit that remaining inventory and upside, including some interesting things on mature resource like refracs.
See, I told you, Jay, he's like a genius. And when it comes to consolidating the deals, there's no one else.
I'm trying to follow this. I'm trying to write notes, and I'm not sure how to spell some of this, but I'm learning a lot, and I'm just kind of curious, how does this affect the average person? Because we have the average person, very successful, motivated, want to know more about the oil and gas industry. Why do companies do this? And what do you think? What's the big reason why one company buys the other one for $20 billion or something?
Yeah, so in oil and gas, it's all about replenishing your reserves and maintaining your production base. So for years, companies have done that through both exploration and acquisitions. There's been an underinvestment in exploration, we think, over the last decade. Globally, companies really pulled back. They relied on shale to replenish those reserves and increase production. Shale is also maturing now. There's still a lot of resource left there, but the plays are getting into the latter innings. And so as companies look at their opportunities to replenish the volumes they've produced, we see M&A as being a very attractive option for them. It's also important that you be a low-cost provider in this industry. So you don't control the cost of what you're paid for your oil and gas. You don't get to set the market price in the global market, despite what the FTC may think in some interesting cases. And so the way you compete and do well is by being the lowest cost producer. And if you're bigger, you're able to more efficiently operate the assets. You have economies of scale, and you can deliver those volumes at the cost that allows you to make money and still keeps the oil and gas flowing for the consumer.
One question that I had was, when does the consolidation end?
Yeah, that's a great question. We keep thinking it has to slow down just because of the scale of deals we've seen. 190 billion last year. We're already at over 80 billion for 24. These are unprecedented numbers. We certainly haven't seen in decades. And I think this even beats some of the late 90s consolidation we saw with the super majors. So it does have to end at some point, but it seems like everybody's participating. I think we have a few more big deals still to go before we can really call our industry consolidated. It does get tougher, though. Every cycle, the company you'd like to buy, whether that's a big public company like Marathon or one of the private equity positions that were put together in the Permian Basin, like what's sold today with Ameridev Incap's portfolio company, that's one more off the table. And the remaining opportunities out there, maybe a little bit more expensive for you. So we think companies are under the gun a bit to keep finding and executing on these deals.
Yeah.
Absolutely.
I guess it's a good opportunity for people that like us that are smaller independents that they're going to shed some assets from this because they don't want to do it all. They want to make sure that they, I've heard that the amount of money that they save in G&A cost just by consolidating is an enormous number, hundreds of millions of dollars. Unfortunately, they have to lay off a lot of these people, which is good for us because, hey, we've hired some really great people that that come along with these kind of, divestitures and consolidation. So we pick up some really good people, but we also are looking at some assets that these companies have, because our goal is the same, increase the value and sell in the future. So it's a good opportunity for us, but for several reasons. But we do see a lot of consolidation, see a lot of big deals. I know the big independents, with Crown, and I think Newborn's left. I don't think they've done it yet. I don't know if they will. What do you any insight on Newborn, Andrew?
Yeah, I think that's probably the name that comes up near close to the top when we're talking to people and companies. So with Endeavor getting out, it was a big private in the Permian Basin. We call them true privates, family companies that aren't backed by a private equity group. So Newborn's the big one out there in the Delaware, and Fasken in the Midland Basin. And I think there'd be a tremendous market appetite for either of those companies if they were to be interested in selling. But you've got some new family members, new generations coming in, and they seem to be enjoying doing what they do, running as an independent E&P. So never say never. You throw a big enough pile of money out there, they might bite. But everything I've heard is that they enjoy being private. And similar for like Continental and Harold Hamm, he took his company public and then decided public markets weren't for him and went back private. So we think that those true privates probably stay independent, but again, you never know. I think your point about non-core sales is great, very timely. We do sort of look for that to be the next wave of deals as these companies sort through their combined portfolios. They're going to be spinning out some stuff that are good quality assets. They're just not necessarily a good strategic fit for them. Maybe there's not an area that they have a lot of operations in pre-existing, or the inventory is not quite competitive with other stuff in their portfolios. So we do feel like you're going to see some non-core sales, particularly back into the private market. And that's how you spin up some more new exciting companies that maybe the acquisition targets 5 years from now.
Yeah.
We'll keep you in the loop, and you'll keep us in the loop throughout all of those acquisitions and deals and all the details that you bring to the table, Andrew. Thank you so much for hopping on and talking with us about that. We'll be having you on again. Absolutely. Now, not a controversial deal this time, but we actually talked to somebody who had a pretty big controversial deal. Steve Gill is our show guest on this upcoming episode. So stay tuned. You're definitely going to want to hear about it. Thank you so much, Andrew, for being on the show. And let's kick off this podcast.
Great. Thanks, everybody. Jay Young here. This is the Jay Young Show. We appreciate you being here today. We're at Doug 2024, and we are excited about our guest. First, my co-host, Jordan Soto. Jordan,
Hello.
Thanks for being here today.
Oh, thank you for having me.
You've been doing a great job so far.
So have you. And
Man.
you know who's also going to do amazing? Steve
I'm
Gill.
going to try.
Steve Gill, attorney, I'm assuming,
Yes.
with Vinson Elkins. So tell us something about yourself real quick, and then we'll just talk about the M&A market, which I think
Sure.
is what you specialize in.
So I've been at V&E my entire career. I graduated from Tulane Law School in 2001. Yeah. And then started with V&E in Houston, been there ever since, made partner in 2009.
Congratulations.
Yeah. And, I've worked my way up. I used to do a lot of capital markets work when I was a baby lawyer, but about halfway through, I started really focusing on M&A.
What's capital markets?
Capital markets, like taking companies public. So you do IPOs, initial public offering of a company, and then
What's the biggest deal you ever worked on? Can you talk about it, or do you have to kill me?
the biggest IPO I've ever worked on?
Biggest deal. Is there anything out there today? I mean,
Well,
Chesapeake, or was it Exxon? Or
well, I did the most recent big deal I did is I sold Crown Rock to Occidental.
Oh,
That's
wow.
a big
You worked
M&A.
on that deal.
Yeah,
But that was M&A, right?
that's M&A.
Congratulations on that deal.
I forgot
On the
all the
Endeavor
IPO. No, I was Crown Rock.
You're on the
Yeah.
Crown Rock side. Okay.
Yeah, my firm worked on the Endeavor deal, but I personally didn't. Yeah, that was with the Diamondback.
Good.
Wow.
Yeah,
Very good.
M&A I just feel like, we heard a little bit about this last year, especially from the Heart Energy editors, was that it's almost like, have you guys ever watched Game of Thrones?
yeah.
And they say winter is coming, and they always say winter is coming. I feel like everyone typically goes to consolidation is coming with M&A.
That's been the last 5 years, and it finally did. We finally had the White Walkers come in or whatever.
Yes, the White Walkers have
Yeah.
arrived. So,
Exactly.
what are your thoughts on the consolidation in M&A?
So starting really last summer, all through the first quarter here, we had a number of huge acquisitions. You had Exxon Pioneer, which is now going to close finally after getting out of the regulatory approval stage. My deal is Crown Rock selling them to Oxy, Chevron buying Hess. We also did.
I want to talk about that one.
Okay.
Go through the rest of your list, and then we'll go back to that one.
Sure. We represented Cord it was more of a merger, I guess semi-acquisition, but more of a merger with Enterplus. And so there's just been you had Apache Callan. That was one we actually missed out on, but there's been a ton of them. And so the question is, and there's still things that are kind of, below the surface, people talking, people doing the mating dance, if you will, the courting.
It is how it goes.
Yeah.
It is
And we'll see how it happens. Wow. The other question is, now that you had all these consolidations, what do you do with, people they buy up a company, but they don't want all the assets the company has. And so you'll probably see a lot of asset sales in the next year, different packages being shipped out.
What do you think is going to be the most common package?
Well, if anybody can sell anything in the Permian, although those are the things that people want to keep,
Yeah, tier 1 acreage, I don't think so.
Yeah, I don't think tier 1's. Yeah. That's why they did the deals, right?
Yeah.
Okay, let's go back to Hess.
Okay.
There's been a lot of discussion around this, and I'm just dying to know your thoughts about that situation.
With the JOA and the right of first refusal and all that stuff?
Yeah.
Well, unfortunately, we don't have a copy of it because
we did.
It's not public. Yeah, and so does every hedge fund that calls and asks us to say, who's going to win this thing?
Yeah.
They obviously both knew about it going into it because they had a condition in the merger agreement that it all get worked out. And, we'll see. We'll see. I think if I'm going to speculate, I would think that Exxon is just trying to take advantage of the leverage that they perceive to have and see what they can get out of it. But again, I really don't know.
What are your thoughts?
Hey, so what's the most hours you've ever worked in a week? Being an attorney, am I getting
the most I ever? We do it by the when you talk about the horrific
hours?
Months, So the most I ever did was 340 hours in a month. Yeah, which if you go through
hours in a month, so
when do you sleep?
most people work. Most people work 160.
Yeah, 167. You get to 2,000 hours a year. So it's
double
that.
Doubled that.
Yeah,
you doubled the amount of.
I was a much younger. That was like 17
you
years
a baby
ago.
lawyer then?
Yeah, I was.
Baby lawyer.
Yeah. I had more. I was able to stay up a lot longer. Now I don't have to do that as much.
Yeah.
Wow, that is a lot. And you were charging how much at that point? I mean, it's like probably not as much as you were making, of course, but.
I'm trying to think what our rates were back then. Definitely not what they are now.
Yeah.
Now we're.
Have they just skyrocketed?
Fees? I think they all have. The interesting thing is it's like value versus the cost. I mean, a lot of times people. They look at the headline sticker and they say, wow, that's really high. But then when you compare our rates to like investment banker rates for the total deal and the value that we bring, especially if things go wrong, I mean, that's what we're there for, is to make sure if something bad happens, you're protected. I've had very few people ever really complain about the overall fee, but then they look at the hourly rate and they're like, wow, that's a lot of money.
Right.
When you're talking about the mergers and acquisitions, what is the biggest challenge that companies go through when they're going through that process?
Yeah, there's so many challenges. I mean, the first thing is these are all publicly traded companies. If word gets out that they're in merger talks, people start trading the stock, particularly if they're looking at a stock for stock transaction where it's based on the price of your stock, it can get all thrown off. So discretion and confidentiality is always key. There's also the balance on moving fast for that reason versus, doing your due diligence and making sure you fully vet the counterparty that you're working with. And then it's really kind of the allocation of the risks. Every deal has a different risk profile. A year ago, we wouldn't be talking about regulatory risk like we're talking about it now because the FTC wasn't stopping oil and gas deals like they tried to do with some of these.
What about management teams? Who's going to take over? Who's going to be the head?
Social issue. Where's the headquarters? What's the name of the company? Who's going to? What's the ticker symbol? People fight over the ticker symbol. I mean, how's the board going to be composed? Who's going to? All that stuff. I mean, there's
so many things to think about.
Mm-hmm.
I mean,
that you have to do like
lickety split
before it gets out because you don't want it to get out, obviously.
Yeah,
absolutely.
And I could imagine that would be a big operational hurdle for companies just to find everyone's place and maybe that also impacts internal company culture as well. Not just the stock trading, but also people internally are like, well, what's going to happen with my job? Like, am I still going to be able to be here? We've seen people buy other companies and then get rid of the workforce there, or replace them with their people, or things like that. So
well, the biggest term is synergy, right? I mean, if you put together two companies, one management team is going, right? And so usually they have in place some severance package, some would call it a golden parachute.
Gosh, so they know, and they're trying to just prepare and soften the blow.
They're just prepare for it, and normally they're
but you have to grow.
They're pretty fine with what the management team's getting. The real question is sort of below that, the rank and file. A lot of these deals, there are promises that are made in the merger agreement to the employees of the company that's getting acquired, and it's usually there's protections in place for a year. If it's really important that they maintain that workforce, a lot of times they'll have stay bonuses and incentivize the people to stay, because it is like you signed up to work for company X and their chief rival is now taking you over. Maybe I don't want to work there.
I mean, that's a good point too. Yeah, that is really interesting. I want to shift gears slightly to what you predict to come for mergers and acquisitions. What do you see on the horizon of two companies coming together?
Well, you mean just general trends in the space?
Trends,
yeah. So I do think there's going to be a continued consolidation. I think a lot of the big deals are probably done. There's maybe one or two other operators that are of that magnitude that could come in and make a big splash like that. But I think you're going to see a lot of like middle-sized companies getting married, right? Doing a merger of equals, so that they can create scale and be more competitive with the big boys.
Right.
The real question that came up on our panel is whether or not some of the Europeans, like Shell and Total and BP, whether they will come back into the U.S. market, which they've kind of shunned because, fossil fuels are a dirty word in Europe. But we're making a lot of money on it now. So are they going to come back in and be more interested? I don't know. That's one I'm watching.
Yeah.
And so I think you'll see consolidation in the middle market, if you will. I think you'll see potentially some European investment, and then I think all these big acquisitions, like I said, they don't want everything that company has, and so they're going to be selling off asset packages and the like. I think you'll see a lot of A&D activity this year.
Yeah,
and they took on some debt, so they'll probably are.
Yeah, they got to delever.
They'd love to get rid of it and get rid of some of their debt.
Yeah, sell some of that, repay some of the debt they incurred to make the acquisition. Yeah, that's what he's doing.
Yeah. What kind of guy does it take to be a lawyer? Well, I mean, do you like lawyer or do you like attorney or
abogado?
No. Okay, good. Thanks, I appreciate it. some people come at you. They'll start.
It's true. It's true.
I mean,
just don't say ambulance chaser, because it's not the kind of lawyer.
Okay, there you go.
No, it's not that kind of lawyer.
Yeah. But anyway, so what does it take if I was in high school and I think I could be a lawyer?
Yeah. I think one, you have to have a good work ethic, and when you start your career, you can't be too. I mean, you're gonna learn a lot of things on the fly.
Yeah.
You're used to going through college, getting good grades, law school, getting good grades, and all of a sudden you don't know what you're doing, and you're sinking and swimming and all that. You're learning on the fly, so it's a little bit of a reality check, and then you start learning it, and it's hard work, it's being organized, but the ones that I think do the graduate and become the best at it are those that can really distill it down for their client, because a lot of the legal minutia, the executives don't have time for that. They don't want to. They just want to know, like,
in plain English, please.
Yeah, in
what
plain
are the
English,
subtitles?
why should I care about this? Like, I want to do this deal, and you're telling me there's a problem here. Tell me why that's a problem, or just being able to distill it down and being able to sift through the stuff that matters and the stuff that doesn't. Because a lot of,
what matters then?
If you can. If you look at anything, you can find a reason to not do something.
Well, yes, we're always making arguments for what we're wanting, whether that's not wanting it or wanting it. I feel like there's always an argument that's being crafted. When it comes to what you do want, when you're building out a merger acquisition document, what are companies looking for in other companies? I mean, I know that's a big question.
No, but there's some general rules. I mean, if you're selling your company, the last thing you want to do is go out there with announce I'm going to sell the company and then it not happen.
Right.
So sellers want deal certainty. They don't want the buyer to be able to back out because the financing failed. So we don't. In a lot of our deals, there's no financing contingency. There's very limited conditions to closing, and they're very hard to get out of. So that's that's on that side. On the buyer side, you are worried about the unknown, about what's coming with the company that you don't know. So you do the due diligence, and you also.
What does the due diligence include?
It varies, but it usually involves several weeks of like you make document requests, you have interviews with the management team, you go over it topic by topic. Let's talk about your environmental issues. Let's talk about your litigation issues.
I can't imagine.
The good thing is I work at a really big firm, and so I've got specialists and all that. So
I was going to say, your hours might be going.
And every deal has something different on it. We're doing one thing here that involves the Drug Enforcement Agency, and I'm like, I have no idea what's going on, but my guy will tell me what I need to know.
Hey, gotta have a good
what's
team.
the favorite deal you worked on in your life?
Well, the most famous deal I worked on was we did a deal, and this was when I was still an associate. We sold Huntsman Chemicals to Apollo, and we originally sold it to a company called Basel, and then Apollo actually jumped it after it. So we terminated that deal, then went with Apollo. Then the markets melt down. They were talking about deal certainty. I was representing the target. We needed deal certainty. The markets melted down, and Apollo tried to back out of the deal. And so we had litigation that went 8 days in Delaware Chancery Court, and we ended up winning. We got the deal certainty for our client. So that was a huge deal, and actually one that they do now study in law school. So it's kind of cool.
Wow, that's so cool. You're like a celebrity. I didn't realize.
Nobody knows who I am.
They will now.
Yeah.
What was your favorite one that you've worked on?
That one was up there just because it had all the twists and turns.
Yeah.
I really like doing this Crown Rock deal. I think the world of the Crown Rock people. And
Tim Dunn. I'd love to meet Tim Dunn.
Yeah,
I don't know why I haven't met him yet, but I'd love to.
Tim, we need you on the show.
I know. Hey, what?
Tim, you should come on the show.
Yes.
And then the Lime Rock guys were fantastic. That was a home run for both of them, and so it's a good outcome. Hopefully we're in the middle of the regulatory approval process now. I think we'll get through it, but yeah, that was a fun deal, and that was pretty recent, so it's kind of fresh in mind.
Let me ask you this real quick. So because that deal was Lime Rock was like, we're selling, and Tim Dunn's like, hey, I go to work every day. I don't really care if we sell. It wasn't a big deal to him. But it was to Lime Rock because they were at the end of their fund or 5-10.
Yeah, but I don't think Lime Rock would have, they wanted to make sure they got the right
But
valuation.
they got more money than at first it was like, we're going to come out at $10 billion, and everybody's like,
oh, those were just the
in
leaks.
A year. Yeah, it's like next year they're going to come out at $10 billion, and they're like, there's no way they're going to get $10 billion, and the deal closed at what?
12.
Yeah, it's like they got 12. So, but
it's a home run.
But I can see that motivation between those more than I can some other, like Exxon. I mean, Exxon is going to get gobbled up, or they're out of control with, That's why I'm kind of questioning how many different deals are out there, because there's not too many A personalities that are saying, "Hey, why don't you buy me?" Or if you give me $12 billion, I'd go home. Because most of those guys don't want to go home.
Well, that's always the issue with the M&A market is some people are sellers, some people are buyers, and when do you have those things kind of coming together? And with the consolidations we saw, you had a lot of that. You had people that said, at this valuation, I'll exit, and people are like, well, at that valuation with your track record, like Oxy looked at what the Crown Rock guys were able to do and the efficiencies they had, and said, we can replicate that and use what you guys are doing across our platform. That'll be a home run for us too. And so it worked. You just kind of need that equilibrium of buyer and seller expectations.
Yeah.
All right, we got one last question, Jay.
Well, it's like the Scott Sheffield deal with culture, right? Culture plays a really big part into it. And he was with Pioneer, and then he left, and he came back, and they probably paid him a ton of money. and then all of a sudden, hey, they get bought out, But when Exxon came in and looked around at Pioneer, they said, all right, we're good. We don't need to do anything else, right? We don't need to sit around here and try to control you guys. You guys we need to take some stuff back. So I think what Sheffield did with culture really did help a lot at Pioneer.
And it made them very attractive as a target. It was value enhancing. They had great rock. We all know that, but they also had, great systems, great people, and it just made them attractive to the number one company in the world, right? So.
Unbelievable. Started at Parker Parsley. I remember those days. Y'all don't.
Nope. Sorry.
But,
I wish
those were days with the Sheffield's, I guess, his father-in-law had a lot of that acreage back in the day, and then it went to Parker Parsley, then Pine. But anyway, that's great. You get anything else you want to end up with, or
I don't think so.
what's
I
the most
appreciate
amount
you
of money
guys.
you made in a year? No.
Well, they asked me over in the thing who's going to win the presidential election. I was like, I'm walking off the set here. I have no idea.
And that's off, folks.
I have
And drill, baby, drill. I mean, or not.
Let us know in the comments.
Yeah. Well, Steve, thank you so
Appreciate
much
it.
for
Thank
being
you.
here. Thank you
Real
very
nice
much.
to meet you guys.
Absolutely. Come back anytime and